Good evening to everybody on this side of the globe, and good morning to everybody in Japan on the other side of the earth. I'm Alicia Ogawa. I'm Project Director here at CJEB for the Project on Japanese Corporate Governance and Stewardship. In this series, as many of you know, we normally try to compare and contrast best practices in the US and Japan in corporate governance, in ESG, and in stewardship practices. But tonight we have one of the most prominent activists in Japan with us, Seth Fischer, who is the founder and CIO of the fund Oasis Management. Seth is everywhere in the Japanese market these days. He's been challenging Japanese companies even before he established Oasis in 2002 in his position managing the Asia portfolio of Highbridge for 7 years before setting up Oasis. To take advantage of Seth's presence, I'd like to focus our discussion on how the practice of shareholder activism in Japan has developed since the very dark and controversial days of the early 2000s. Back then, foreign activists were essentially run out of town, and Japanese activists were actually sent to jail. In 2007, we saw the launch of a long-running Japanese TV drama called Hagetaka, or Vultures, which portrayed foreign activists as evil Gordon Gekko-type corporate raiders. The strategies and the tactics used by activists have evolved since then, as has public opinion towards activists, or at least to some extent. Later seasons of Hagetaka actually cast Japanese bankers, not foreign activists, as the villains, which shows to some extent that public opinion has changed. And in fact, nowadays, activists in Japan are just as likely to be Japanese nationals or Japanese nationals living in Singapore than they are to be big, bad New York City hedge fund types. Still, Japan is in the early stages of shareholder activism simply because it's still in the early stages of the development of corporate governance and stewardship. Shareholder proposals, a key tool that activists use to achieve their ends, did not even become legally possible in Japan until 2003, and poison pills, a corporate defense against activists, did not become settled law in Japan until 2005. So the practice of activism in Japan is still different from other developed markets in many important and fundamental ways because it's still young. The situation is evolving very quickly, though, given the number of opportunities in Japan. I wonder if I could have the first slide, Emiko. Let's look at the data in this first slide, which is reported by the firm Activist Insight. And this shows that the US is far and away the biggest market for activists, with between 450 and 550 companies targeted by activists in each of the last 3 years. But Japan is now rated as the second biggest market, with more than 65 companies targeted in each of the last 3 years. That's more than in the UK and more than in any of the European countries. Emiko, I wonder if you could show the second slide, the next slide, which shows the issues on which US activists engage upon. So in the US, this data, again from Activist Insight, shows that the focus of most activist campaigns over the past 3 years has largely been on personnel changes, on CEOs and board members. The second largest focus has been on governance factors, followed by social factors. In fact, social factors actually exceed the number of campaigns on environment, which may surprise some people. And now if I could ask for the last slide, which shows demands by activists of Asian companies, but essentially these are Japanese companies. There are very few campaigns against Asian companies by activists. So this shows that demands for changes of personnel and governance issues are paramount among the issues that activists engage with Japanese companies upon. Demands for return to cash to shareholders far outnumber the demands made of US companies, even though the universe of US targets is far larger. This probably reflects the higher priority given to shareholders by US executives and their understanding that they have to share profits with shareholders relative to Japanese company executives. Remuneration, or CEO pay, remains a key focus of activists for US companies, but you'll see on this chart it's not at all a priority for activists in Japan. The most stunning difference, though, between the two countries, however, is in the number of demands made to Japanese companies on social and environmental issues. As this slide shows, there's basically none. But all of these factors are rapidly changing, and I know that Seth has a lot to say about this. Thank you for showing the slides, Emiko. I'm done with them. And these trends shown in the slides are in fact understated, because what's important to understand is that these days everyone is an activist. Everyone is an engagement artist. Pension funds and large global index funds such as BlackRock own practically every stock in the world, and they must own it indefinitely. And therefore, the only way to reduce exposure to market risk is to engage aggressively with companies to encourage them to reduce their vulnerability to things like climate change, supply chain disruption, and the quality and stability of the labor force. Some activists, such as the Murakami funds in Japan, are described as confrontational or even aggressive. Others, such as Value Act and the Japanese fund Misaki, where I'm a director, are characterized as friendly activists. But the fact is that all asset management managers these days are expected to be very proactive in holding discussions with the companies in which they invest. I'm sure Seth has a lot of interesting views on how Japanese executives are dealing with this new relationship. Because there's so much ground to cover, I'm going to dive right in and pitch some questions to Seth for the remainder of the hour. And I hope the audience will have a lot of questions to ask of him. Please just type them in the Q&A box, and I'll make my best efforts to get to as many as possible. So great, I'm going to invite Seth to share the Zoom stage with me. And I'd like to kick off, Seth, by asking you what is just a bit of background, but I think it's important to understand what was the impetus for you to establish Oasis with the focus on Japan. I know that you are now involved in some campaigns in the UK as well, but what made you choose this particular moment to set up an activist fund in Japan? Was it a conviction that you had a new formula for unlocking value in Japan? Was it the governance reforms under Prime Minister Abe or something else? And how did you convince your investors that you were on the right track with this idea?
All the above.
And more.
And more. As you noted, I've been investing in Japan since '95. And the thought every time you looked at companies in Japan was always like, if only if the companies would care about corporate governance, and if only if they would try to improve their ROEs, if only if they get out of money-losing businesses, if only if they work harder and try to improve margins, if only if the list goes on and on and on. And you could spend your time in the 90s and the early 2000s going to see companies and say, like, why are you in that business? Because we're in that business. But you lose money in that business for the last 30 years in a row. Well, we're in that business. But it's not business if you lose money in it. It's called charity. It's like you're hurting everybody. Or a case I had in another company, I won't mention the name of the company, and they had well, later on, but they had a listed subsidiary who's they had an investment, and like that investment is worth, what was it worth? It was worth 54 years worth of earnings for the company, right? And there was clearly a bubble in the stock, like a massive bubble in the stock, and the opportunity was to sell, like just sell the shares, right? Oh, we have a relationship with them. I'm like, great, go out for dinner with them as much as you want, but like you're like, if you want to assure the longevity of your company and the ability of your company to pivot, just go ahead and sell the shares. So yes, things change with Abe, and things change with the start of the corporate governance revolution, and kind of back in 13 and 14, and we had some real early success in kind of concurrently starting some engagements at that time. And you had some success, and you roll that into more success and more success and more success, and you kind of you end up spending a lot more time focusing on kind of what changes companies can make. And and so this was part of our global fund, and we carved out just our Japan engagements and created a Japan fund around it. That was actually driven from, I think, opportunity set is massive, I think there's a long runway for this. And so we've been able to find partners, substantial and very substantial partners who have been, very generous with their time, and share a vision with us to go ahead and continue to execute on this.
Yeah, I don't think anybody could, certainly not me, could argue with any of those factors that you mentioned about why Japan is an attractive place to invest. But it does depend on a certain amount of trust, not only from the companies you're talking to, but from the regulatory environment, the media environment, and again, the legacy of those bad days, in those early forays. Must have been, an obstacle, not an obstacle, but, a headwind for you to fight against.
You're right. It gives you pause for thought. And I was around then. I was investing in Japan and watching this from the sidelines, but only at that stage, only engaging when we were invited into the company.
All right.
Right. And then before we went public with any campaign, we were engaging privately with companies. And then before we went public with anybody, I went ahead and spoke to all the all elements of the bureaucracy in Japan, which spent to METI, spoke to FSA, spoke to the FSA, spoke to TSE, spoke to various other groups as well, and we said, look, what do you think? GIC as well, and what do you? GPIF. GPIF as well. Sorry, and asked every single one of them, like, what do you think? And they all basically spoke with one voice, like, go ahead, be public. Like, we welcome it, right? Times have changed. And so, like, I heard directly from them from them before we were public and everything. And yes, and Mizuno-san and GPIF said, look, I need you. Like, we need beta. And the only way I'm going to get beta is people like you go ahead and push management. And it was clearly within the spirit of the times, like what Abe wanted to achieve and what he was like pushing everybody to get achieved. And you've had them extraordinarily on board. I mean, we've had numerous meetings with, maybe I won't mention, but, we'll mention the groups because it's a public forum, but numerous with various parts of the government. And they were aware of every campaign we've been engaged with, and they were only encouraging.
Mm-hmm. Yeah, I think Abe was very encouraging. I think his hope was that, the activists would convince Japanese companies to unleash the cash they had on the balance sheet and invest it domestically and raise wages rather than give it to activists, and particularly foreign activists. I'm not saying that's my view. I'm saying that's what I think his view was. And again, I marvel at your ability to have been invited on a friendly basis, because a lot of the friendly activists that I'm aware of, they have backgrounds as consultants or whatever, and they go in and they offer operational advice, or they suggest, HR changes to the board or whatever. But for you to go in and say this business is not good, even though Shacho made it, that must have been a really challenging kind of thing to take on.
Look, let me kind of almost pause this for a second. We're doing this this is not American style activism at all, right? And this is not like the era of like 05 to 07, where, as you very well know, some of the Americans came in and drew like a triangle and said, equity is at the top, right? And we control the company, right? Shareholders control the company. And we're saying, no, that's not what we're saying. We're saying, look, this is a circle, right? There's the employees, there's management, there's the customers, there's suppliers, there's the creditors, and yes, include us in that circle. So like, there's a very different message, and we are spending, the enormous amount of our engagements are on operational improvements, which is just going to be better for everybody.
Sure.
Right? You can go ahead and improve margins. You can go ahead and expand geographically. You can go ahead and monetize your IP. You can do other things. You're making the pie better for everybody.
Yeah.
Right. So, we're spending, and it's good for everybody for the, short, medium, and long term. This is not American style activism at all. I keep on talking about like Japan is like, it's like in the 3rd or 4th inning, while the States is like in the 27th inning.
Yes.
Right? Like, it's like way, way, way different extremes.
Yeah, I didn't mean to imply that you weren't helping on operational issues, but what I meant to say is from the point of view of a very traditional Japanese company, if a Japanese guy, Japanese investor comes along who came out of Bain or came out of McKinsey or something, he's obviously going to have a much easier time, right?
You know what? I find, and you know, as we're discussing kind of operational improvements, I find that is the easiest way in. We might have governance concerns, we might have minority shareholder protection concerns. The easiest way in every single one of our campaigns, we're talking about operational improvements, because that's also the easy way to talk to the CEO, right? This guy grew up in the company, invariably they're guys, and those men have grown up in the company, been there for 40 years, right? And so they're happy to talk to you about their widgets or their whatever their businesses are. And yes, you can, the way for us to prove our chops is to have studied the business deeply, so that we can have meaningful conversations with them about their business.
Hmm.
And sometimes that's most of what we're trying to do, improve their profitability in their core business. And sometimes we're trying to do that and fix other issues.
Yeah, yeah. Um, one of the characteristics of a lot of large Japanese companies that I find is when you talk about going in with a business plan or an analysis of the business, is that very often the executive directors themselves don't know much about the company, right? Because they came up through the steel business, or they came up through the semiconductor business, or they came up through the whatever, the LNG business or something. And they don't really know that much about the company in total or about their competitors. I've got a couple of friends who are Japanese who sat on these kinds of boards, and they say, you know, I'm trying to find out how my company does with its best competitor, and there's no information inside the company. And so I just wonder, like, to me, what you say or what other activists I talk to say about presenting the company with an analysis or presenting a company with operational suggestions just seems like a no-brainer.
Again, yes, and yes, right? Yes, yes, a lot of directors kind of grew up in their narrow silos. Not all companies. Some companies have been maybe almost too good at switching people around, so they're not siloed. Some people grew up in not very narrow silos. We wholeheartedly agree with the director training being necessary. As you know, we've sponsored director training for women in the entire month of March. 69 women took us up on it. And
Yeah, in Hong Kong as well, right?
no, that's 69 women in Japan.
No, but I mean, you also sponsor
We're
Hong Kong.
very active in boards in Asia in general, very active in 30% Club in Hong Kong as well. But director training is very important. And so, yes, you had these internal boards, and you have many board members who have no financial backgrounds, right? No kind of really understanding what the director duties really mean, right? And so not really asking and challenging and asking kind of the right questions. Whether they're internal or kind of what we call governance 1.0, like the first round of independent director, right?
Yeah.
You hired your captive lawyer or accountant as your independent director, right? And what we call we're like a 2.0 or almost 2.0 plus at this stage, right? Where you got like directors who are in your field, maybe from competitors, maybe formerly from competitors, who know the business, can ask meaningful questions about the business, can really challenge management, have their own reputations at stake. And yes, the more they have, the easier the more of them they are, the easier it is for them to speak up. So now we need to have a third of the board being independent. That helps. We have some cases now recently where the majority of the board is now going to be independent. That even helps even more, right? And having independent directors who are not there for 15 years. Right?
Yeah. But I think it's very interesting when you look at all these Japanese companies. Some of them on paper have model corporate governance structures. Others have terrible structures on paper, and yet these companies work better. In my observation, it really depends on how open the CEO is to working with independent directors and to listening to dissenting opinions. If you have somebody who's just like, I'm the king, it doesn't matter how many independent directors or special committees you have, right? Would you agree with that?
I agree with that wholeheartedly. You still have some tyrants, or for lack of a better term, but you still have people kind of running their company with an iron fist and have very appropriately selected directors who are going to be cowed by them. And, we're engaging with some of these companies where, like, we're saying, like, time's over, right? Like, in many cases, they're really, look, if the guy is an extraordinary visionary and has created an enormous amount of, enormous value, then we're probably not there, right? But, but the person, like, is running it as his own fiefdom, but is also not visionary, not improving margins, not running a great company, and using it as his personal fiefdom for private loans to themselves or for, other kind of abuses, then yes, people might have been cowed, and we're there to say, stand up and say, you know what, those days are over, and we're going to hold you accountable, and there are tools that we have to be able to hold them accountable. I mean,
I want to save that because I want to go over the tools because those are very interesting, I think, and people in the audience may not understand exactly when you use them and to what extent you use them and so on. But before we leave this topic of history, that era and particularly the incidents with Livedoor and Fujiterabi, they created a bunch of legal or quasi-legal, quasi-regulatory desires, expectations on the part of the regulators and the Japanese business community. What's the legacy of all that? Is it still with us? Is it disappearing? I'm thinking mostly about, the real sensitivity about collaborating in any way, although it's in the code, right? But what is the legacy of back then, and to what degree has it changed? Legacy legally, socially, whatever.
look, we all, I would say, like, speak, not that I can speak on behalf of all engaged investors, but I think generally everybody's all very cognizant of the history and are very cognizant not to touch the third rail of that history, certainly if you're a foreigner, right? I think there's more aggressive activity for Japanese nationals, wherever they might be, because they're maybe not as reflexively, sensitive about it, or don't feel they need to be as sensitive about it. But so, the legacies are poison pills, which are now, right, we like reached peak poison pill, I think it was 2014.
Right.
But and we are like half of peak today, and they continue getting voting against, or management and the directors are not even putting it up for a vote again. So I think we'll continue. I think that slope continues to go down, and we'll continue to get rid of poison pills. I think it's seen appropriately enough that it's bad governance. We have this collective action, I think, which is what you want to refer to as well. And
I can't help but notice on all of your public statements, you're very careful to say, I'm not asking anybody to vote the same with me, right?
Right. We are trying to inform people of what their options are and of what our views are, but we don't have a voting agreement with anybody. We talk about that explicitly before any meetings with anybody. Look, we're happy to share our view, right? But I speak for Oasis, and that's it. We're forever encouraged, and I'm forever encouraged by how, I do take very careful note of how people voted, and that's, it's very helpful. It's very informative for us, because there's a lot of cases where we come back a year and year and year again, right? And so it's very informative of how they voted in the past. It's very informative for us for other campaigns as well. And it's informative for us of how those independent directors of those other companies are acting, how sensitive, how much they're driving value or not. Like, certainly if we think we've had a very reasonable suggestion, but so yes, I'm aware of how people vote, but we're just asking people to keep an open mind. We're not telling them we don't have any voting agreements with anybody.
Sure. No, obviously I understand that. But going back again to this idea of how you pick your investee companies, how you pick your portfolio companies. You mentioned that it's important to be invited in, but obviously you're someone who's not shy about getting demanding and taking the fight public. So is it something that you try to avoid at all costs? I mean, I think, as I mentioned to you, like recently there's been these statements by people, even people like Bill Ackman, one of the most, vocal public fighters and Paul Singer saying, no, those days are gone. Now we do behind the scenes. We don't try to be public, blah, blah, blah. Where do you stand on that? How important is it to be public or not to be public?
Our approach, our approach is, remember, the shares are for sale any given day, right? Companies, like people not realize it, the company shares are for sale any given day. You can buy your shares, you can buy a stake in a company whenever you'd like. That being said, every single engagement we do, we start off friendly, meaning we engage, we do it directly with the companies, and 90% of them remain, private and friendly with the company. Right? We spend an enormous amount of time thinking about the company, investigating the company, researching the company, send them long and engaged letters of kind of what we think, have long and engaged meetings with them. Some of them mean, sometimes you send them a letter and they say, great, we've done all, let's get on a call next week. And Seth, we've done all your homework. What else do you have for us? Great, right? Sometimes you have, Seth, you ask for 6 things and we think 4 is right and 2 of them are not appropriate. Great, let's talk about it, right? And that is the far majority of what we're doing. But we don't engage with any company where we don't think we'd also have hard power, meaning nothing's off the table, right? So we think what we're doing is best for everybody. If we're going to send you spend a lot of time in the company, have a stake in the company, send you a long letter, and you choose to pretend you didn't get the letter, we'll be increasingly vocal. If you're going to go ahead and and say and just do nothing, right? The equivalent of kind of throwing out the letter, we're going to be increasingly vocal, and so we're prepared to kind of bring that public, and we're prepared to bring that to to a proxy vote or litigation if that's appropriate, or whatever that might be. But everything we do, every company we engage in, we find companies we think are cheap, but cheap for a reason, and basically remove that reason. Sometimes that reason is simply they were engaged in some money-losing other business related to that, not related to their main business. Sometimes it's they have a great core business and they really should be expanding. Like whatever the issues are, right? Sometimes they have a great business and they just end up just sitting on all the cash that's gonna get inflated away at some stage, right? Sometimes it's some other pet issue that might exist, right? Sometimes it's that putting all the cash of the parent entity, all these other issues.
Yeah.
Right?
I think the whole issue about parent subs and parent sub listings is such an important issue for Japan, and it's one that you know so much about, and one where you've really been a kind of champion for minority shareholder rights. But before we go there, I want to just pick up on something you said. You said that you're after what's best for everybody, and you and I can agree on what is best for everybody, and a lot of investors would agree that what's best for everybody are among some of the things that you're proposing. But I think there's a tendency in Japan to say, oh, stakeholders, oh, the related companies, oh, our subcontractors, oh, our employees. And I had one CFO recently tell me that it was very important to keep a big stash of cash because Japanese companies can't cut staff, right? So if revenues go way down, they need to have the money on hand to take care of their loyal, poor employees, blah, 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 blah. So what I guess I'm trying to get at is how do you be the evangelical, right? I mean, these are managers who grew up under a completely different regime.
Again, this is not New York or American style, let's run this business, the acts, to just on time and with not a dime of extra cash and and let's cut staff and all the things that we watch from the sidelines of what's gone on in the States, right? We're not, that's that pendulum's over here and we're the other extreme, right? And so 40% of companies and topics have over 20% net cash. Right? While they probably could be borrowing 4 to 5 times the EBITDA, right? So we're at the other extreme entirely. And so yes, they've been trained to kind of think about a rainy day, but I actually don't think that's many ways that's honest, right? They're not talking about a rainy day. They're talking about Noah, 70 days, and they gonna build, and they but the thing it's gonna rain for 100. What is it? he was in the ark for what, 120 days, but it rained for 70 days. He thought it was going to rain. They think it's going to prepare to rain for 70 days, right? Hong Kong has got like enormous amount of like really black rain and great typhoons. 3 days max. Right? So, so yes. So we go through them. They talk about often it's like cash to sales, or it's cash to, or it's even, cash to payroll, right? But the metrics, so when people start talking about that, in often, not always, but very, very often, it's not an honest conversation, right?
Yeah,
It's just a fear conversation, and I don't think they've actually really thought about it.
I'm not sure it's the dishonest conversation. It's a tendency of all human beings to stay within your own comfort zone, right? And to say what you grew up with, right? And
Yeah, but the funny part is these companies didn't grow up with that much cash. Like they've only been adding to it, right? So you could, many times, you want to say, look, that's fine, but let's go back to where you were. Did you think the company was unsafe 10 years ago? Absolutely not. Great. Let's go back to where you were 10 years ago. You just didn't need to like keep on adding to it. The truth of the matter is that conversation is getting much easier today. There's so much more of a focus on ROE. There's a fear of inflation. Right? If inflation comes, you really gonna then it's like really not a good use of your money. And this is the balance sheet part is a small part of what we're doing. Right? We're really trying to improve the businesses overall. But so it's like it's part of the conversation, but that's not the whole conversation.
I got it. Can you talk to us a little bit about the stages of the progression of the campaign? Like at what point you started to talk about, when you would publish a letter, when would you make a shareholder proposal? Would you call an EGM? Those kinds of things. Can you walk us through a hypothetical timeline of how a discussion with a company would go and why you would use those tools and when?
Sure. So look, there's nothing is fully generic. And I talk about in general, investing is much more art than science, or like carpentry, meaning it's not like, it's not, but the typical example is we go ahead, invest in the company. We go ahead and study the company for a long time, whether that's, 3 to 9 months, invest in the company, send them, we've by this stage, we've met with IR a couple of times. Now we're talking to their competitors. Now we've talked to their customers. Now we talk to their suppliers. Now we've learned about the general state of the industry globally. Now we've gone ahead and kind of figure out what the best practices are. And now we've figured out what we think the opportunity is, like the improvement opportunity is. Like what is the improvement opportunity? What are the issues? Right? We have a long list of what the issues are. And we discuss internally what issues we're going to focus on. And then we send them a long letter and or presentation. Right? And so then that's their company's opportunity to say, great, like, let's have a real dialogue, or great, let's do them, right? And our deal is, look, if you go ahead and do them, we're not going to tell anybody we were here, right? It's good for you. You'll get all the accolades. You'll get all the rewards, right? And look, and we're happy. We're happy for us as for our shareholders, for our investors, and we're happy for everybody involved. It's good for everybody involved, right? If you don't, right? Now it depends on like, what that dialogue, that's like the first test point, right? Now we've like rung the bell, right? And we've kind of like, we're standing there with like a package, right? And we're saying, great, like, and we're like invited into the house much more often than ever before for tea and have a meaningful conversation. But if we ring the doorbell and you kind of pretend we're not home, right? Then we'll be increasingly vocal, right? And so, the cases are, there's been cases where they like just refuse to have a meeting.
Yeah, can I interrupt you for a second? Because I'm actually working with 2 US public pension funds. I mean, how scary are they, right? And they can't get meetings at 3 of the companies they want to talk to. I mean, so again, I'm in awe that you managed to get access, because it just seems that they're among certain kinds of Japanese companies, right? There's still this desire to pull the curtains shut and keep the door locked and not answer the doorbell.
Right. Well, this is where we don't get into any situation where we're not prepared to be public.
Okay.
And so if you kind of pretend you haven't gotten a letter, we'll be public. And so Public is everything public website. Public might be press. Public might be, might be interviews, might be kind of presenting our case to other shareholders, might be everything, right? And then it's another opportunity. It's another opportunity point for management to engage, right? And we've had a lot of cases where like you go public and the next morning they call you up and say, "Where are you? Let's talk." Right? Great. And the answer really is like, "I'm sorry I took to this, but like I did every single time I did engage you directly." Right? But then you have cases where they like still pretend not, but still basically don't make any progress, right? Okay. And in those cases where they don't make any progress, then we'll bring it to shareholders.
Okay.
Right? So that's like your normal course to bring it to a proxy or to bring it to an EGM, depending. Some degree there's timing involved, some degree it's the seriousness and how crucial the issue, how like the urgency of the issues. Right? And we've done both and continue to do both, and or when appropriate is litigation.
Yeah, there's already about 20 questions in the Q&A, and I want to ask 2 or 3 more of mine before I get to those. I just on the issue of shareholder proposals, you've made proposals on a broad range of topics, right? Whether it's M&A transactions or payouts and cross-shareholding dissolution, all kinds of things, right? But you've also been notable in your success in getting directors on boards. And the example I think of is Suncorp, which might be a special situation, but I want to ask you about that because my observation here in the United States, even in the United States, is that so-called dissident directors who are nominated by activists or by outside investors often have a very hard time getting accepted by the board. And we're seeing that play out in one of the big companies in Japan right now, right? So how do you think about that? I mean, do you think that if you're nominating a director, especially even if you're nominating 2 and they're going to be a minority, is that an effective way to improve governance on a Japanese board?
No, I think you're right. Meaning, I think it's very difficult for a single dissident investor to have any real impact. It's like, you know what? It's like Elon Musk and Twitter right now.
Yeah.
Right. I mean, like not to compare anybody here in any way like that, right? But Elon Musk chose not to be. I mean, it's in the front page of the papers, yesterday and today. Right, he chose not to be on the board of Twitter, probably so he could be more vocal, right? And
right.
For Twitter, it was more of an issue of like, oh, we could have just got him on the board, and then we could have like shut him up.
Right.
Right.
There is that. I'm sorry to interrupt you, but I think you just said something very interesting. I can think of 2 cases, and I'm sure you can identify which they are, where an activist investor was invited onto the board of a Japanese company. And one might say, oh, that's because those 2 guys have something really valuable to offer the company. One could be quite cynical, which is my specialty, and say it's a brilliant move to diffuse attacks by other activists.
Yeah, I think that is largely the case. But the shares are still for sale every day. And like you could still, and we've been approached. We're approached all the time by directors of companies of like, how can you help us? We're approached all the time by family members of companies. How like we're frustrated with management. We'd like help. We need to make the company more profitable, and we're open to all those dialogues. And a lot of kind of directors were like, look, here's the issue. Like we need to, I'm doing this because I think it's good for the company, but we need to fix this. What type of solution might you have, or how can we fix this? So I think you're right. The single dissident is hard. If you're going to pick 1 or 2 people as directors of the company, they need to be really special people. And, and invariably we're putting non-us on the board, right? So we're putting like truly independent directors. And you can ask every single one of the independent directors we put on. My marching statement to them is, look, I want you to do what's best for the company, right? Choose people that we think that we understand what that means. It means in terms of questioning management sometimes, holding management accountable. Think about profitability. Think about ROE. Think about ROIC. Think about like what metrics are we going to use to measure success, and then hold management accountable to measuring success. But you're right. It's very hard for like 1 or 2 people to do it. It's a start. We don't, that's why we're sitting on 1 board and not more, because it's easier like in this case, we're basically working with the majority of the board, and we're actually, my colleague who's the director on the board is considered an internal director, not an external director, right? Because he's like acting for the company. And I'm actually, I'm eager to get him back off the board at some stage because I've like lost 90% of his time. Like he's spending 90% of his time as being a director of the company. It's like that intense.
Yeah, yeah. I want to ask another question, which is I'll just ask it. I don't want to sugarcoat it, but I've got a former colleague, in fact, who started a Japan-focused fund a couple of years ago, and he's a very smart guy, and he's had some very long years investing, and he says the one thing that concerns him is, again, he's investing and engaging with management very closely, and he's done the analysis and he makes the presentations and so on, and he says gradually he can see the internal people accepting the idea. The problem is that his investors have a 3 or 5 year time frame. And I guess my question to you is there an inherent disconnect between the time frame of many, let's say, non-endowment, sort of those kinds of investors, and the pace of change that's possible in Japan?
I think there's massive acceleration and change. I think what you're describing, I think I might know who you're talking about. I think the phenomenon is more historical than forward-looking. I think everybody has less patience than before, but you see enormous amount of voting against management by domestic investors, right? By pension funds and domestic investors, and their patience, I think, is the thinnest. And so, yeah, I look. You can look at the voting records, and the voting records are, the votes against management are coming from domestic and not from international.
That's true. That's true.
And so their patience is the thinnest. So I think there's massive acceleration in engagements, and there's acceleration in kind of the success of those engagements. So I think that's like generally a historical issue.
I'm going to start going down some of the questions that have come in. I'll start with Luigi Limentani, who works for Compass, whatever the number is, 70 whatever. He says, what in your view is the key to make share-based compensation more prevalent with Japanese management? Yeah, it's like, why don't Japanese CEOs want to get paid more?
Look, we recommend Abe from Pay Governance to an enormous amount of boards. We're a big fan of getting management paid more and getting them paid more with performance-based compensation. And we're a big fan of like improving that mix. And historically, I mean, there's all this. This is more like the historian class. Historically, they've fought it because that they found like they weren't actually getting paid more. They're just making less money because market hadn't gone up forever, and they kind of so they didn't want that. I think that spirit is changing. And actually, I think like Abe in particular from Pay Governance has done a very good job of putting together a nice mix of performance-based metrics that are helpful. So once you get them in the room to like, you will make more money. Yes, we're going to hold you accountable, right? Yes, it's not, we're going to switch your base, but your probability to make more money if you do a decent job is far higher, right? And so it's not just taking money out of their pocket. It's actually giving them more money. So kind of give them more of a ring than just like, than just a stick.
Yeah, the most depressing conversation I've had with a Japanese exec a couple of years ago is a big old financial institution, and the guy was getting some shares as comp, right? But he didn't know how many, he didn't know what they were worth, and he didn't know what the share price was. Yeah, I mean, so that I'm sure that's not the majority, but it happens. So there is another question. Oh, this is an interesting question, which I know you have a lot to say about, from Masako Suginohara. And the question is, do you think basically theft has the intention or the effect of stifling shareholder activism?
No. We've had it explicitly from the government bodies is not at all targeted at engagement investors. There was like fear for the first day, And I think actually that one article about a friend of ours was wrong. And, we kind of, subsequently he's corrected it. But, that was our fear initially. I flew to Japan immediately, met with everybody involved and said, no, this is not about you. This is not about you. It's not about, and so, no, I don't think so at all. I actually think, theft is a completely reasonable idea for in the world that we exist today. And actually looking at the world today, it looks visionary compared to where, it looks visionary now when it was to kind of to what the world looks like today. So I think it's completely reasonable, but it's not targeted at basically engaged investors.
Yeah, no, I nobody cares what I think, but I agree with you, and I think compared to the regime in America or the regime in certain European countries, it's actually much more transparent and much more easier to it's much more easy to deal with. Yeah.
Look, exactly. We have all these exemptions. They explicitly exempted us.
Right. It was a terrible rollout. I think we can agree on that. It was a terrible rollout, but everybody got their act together very quickly. So I'm glad that you feel that way. Somebody who chooses to remain anonymous says, what is an effective way of dealing with the tyrant CEO that you describe?
It's, as I said, we started everything off softly with soft power, but we're prepared to use hard power. So at some stage, that tyrant CEO will wake up because we don't get into anything we don't think we actually can win. So if he has good advisors, he'd wake up. But sometimes it takes a little bravery for the advisors to tell him the truth. We're very, we spend a lot of time thinking about can we win, and we don't get engaged before we think we can win. We're not begging them. We're saying please, but we're not begging.
One of the things that's personally disappointing to me, because this is what I like to do, is the very biggest activists in the world don't seem to have a sustained interest in Japan, right? I mean, there's a trade or there's one thing to do, but those big guys, Dan Loeb was in and out, right? And a couple of other companies in and out. But why do you think there hasn't been a level of activism at big Japanese companies? Of course, there's been some, and you've been involved in some. But, there hasn't, the small and mid-cap space in Japan is on fire, right? I mean, every single shareholder register of a small company has like 3 or 4 activists on it. Why hasn't anybody felt that the big companies are worth taking on, or it's possible to take them on? By take them on, I mean do what you described, to agitate for better governance or to suggest ways in which profitability could be improved and so on and so forth.
I actually think it's the opposite to some degree. I think the lowest hanging fruit are the small and mid-cap companies.
Right.
I think the big companies are big because they're successful, and some of them are big because they're actually like much better run, right? And so they're not as low hanging fruit. I think we'll get to them, but we'll get to them in the 7th inning and not the 4th inning, right? And we're starting to get to them, right? But I think it's really an example of with some exceptions of which you and I both know kind of maybe what I'm referring to. With some exceptions, they're just better run companies. Remember, you're talking about big. There's 2 ways of describing big. Right? Big is either let's say net income or revenue, right? Or big is market cap, right? And some of these companies are big because if you judge on the second by market cap, they're so big because foreigners love them, and there's an elevated PE or an elevated multiple because those management really get it, and they're really trying to drive return, and they're really trying to improve their ROEs, and they trade and they have real growth, and they traded them far higher multiples. There's almost like 2 Japans. There's the value-driven far majority of the market that trades like 2 to 5 times EV/EBITDA, right? Deep value, low-hanging fruit. You don't have ton of engagement opportunity, right? And then there's the 25 times EV/EBITDA companies, right? That are run by great CEOs, in very often still the entrepreneur class who are running them, right? Who don't need us, right? So there are some data points in between, but there's actually not as many data points in between, right? So I think we'll get there because there is some things I could think of improving, but I don't think we're there yet. In terms of like why not, people who are within 30 or 50 blocks of you right now, right? Like, there's a lot of, besides the fact that it's not the lowest hanging fruit in Japan, there's a lot of cultural issues here, and actually, to some degree, our approach here is what's, as I said earlier, best for all stakeholders, right? You got to be very sensitive to Japan issues. And I think to some degree, there's like a lot of brain damage when you have a big and liquid, super liquid market in the States, and then secondarily in Europe that you could use instead.
Yeah, yeah. There's two big topics I'm hoping to get to, and one is if we could speak very or not so briefly about ESG. ESG is something that everybody who's investing in has to talk about, and it's a lot of the work I do at Columbia. And one of my concerns is that I really worry that Japanese companies, or a lot of Japanese companies, are going to get their heads handed to them by ESG activists, and by that I mean specific NGOs or specific like religious organization funds and so on and so forth, because I think Japanese companies have been very unskillful in communicating their strategy with ESG. Like they disclose numbers out the ears, right? But what are they tracking, or why are they trying to track? It's a mystery to me and lots of other people. And what I observe about the United States, and I can see it already happening in Japan, is that pure activists, pure shareholder activists, will identify a company who is not doing competitively well relative to his peers. The share price is terrible. The profit outlook, the margins are horrible, and they have bad ESG. And so they do their usual thing on the balance sheet and the income statement and the governance, and then they drag in like the Sierra Club or the Climate 100 Plus or whatever it is for the votes they need, like to do whatever they want to do. I mean, I think it's a very reasonable and effective strategy, and I bet it's going to happen to Japan. How do you feel about, because you yourself have been floating, I think it's at least one, right? Two, maybe ESG related proposals. So how do you see ESG playing out in Japan, and are Japanese companies prepared for it?
It's coming. It's coming, and no, they're not fully prepared for it yet. It's coming. I mean, there's some domestic individuals who are pushing some certain agendas. We've done it. Now we have two active proposals on environmental issues. We have clearly we've had big social issues in terms of safety, in terms of worker safety issues, and then not speak about all the governance issues that we engage with. But you could feel that it's coming, and I actually think Japanese management just need help getting there. We don't have.
From who?
No, I actually think, this is like a unsolicited business advice. Like somebody can go out and start a ES, advisory firm. Like the shareholder advisory firms is invariably focusing on governance for Japanese investors, and they haven't gotten there yet in terms of like really focusing on the ES to kind of shore up their ES, help them. So I think it's coming, but I actually don't think we have real, we've engaged privately with now maybe 5 companies as well on environmental issues, right? In terms of like things they can do and things they can do faster. The conversation is happening. It's happening. I like the conversation to go faster. And they're like 2023, and we're like, this is like in 2020. They're like 2023. I'm like, 2023, you can do it now. Like, be a leader and do it now.
Yeah, it seems that Japanese companies have been much more engaged on human rights issues and Myanmar and China and whatever than on other social issues. It doesn't. This is a conversation which is going to go off the rails. But I always try to teach my students that you can't have E&S without G, right? If you're talking to a board that has no competence or no interest or no awareness, then you're not going to get anywhere. So, I think you're right to say that ESG is slow in coming. It's because we're still not done with G yet. And, we're getting there, but it will be slow. The other thing I definitely want to hear you talk about is what you think about the trend for minority shareholders in takeover bid situations and in, mergers and so on. You have been a landmark makes you sound like a block of cement, but you've been out there, right, campaigning for more important regard for minority shareholders in takeover bids and merger situations. We had the fair M&A rules out in 2019 or whatever it was. Do you think that there's more awareness and an understanding that there is a need to be respectful of minority shareholders in terms of the long-term sustainability of the company?
Yes, fair M&A rules committee that came out and their rules that came out were adopted by a lot of companies. You can look at it empirically by the premiums that have gone that have been paid, right? Everything it used to be like 20% was just the number,
Yeah,
right? And now,
right.
Now it's like 40 or 50 or 60%. So like the premiums have doubled, if not more, right? Now, fair M&A rules had all these different provisions about independent committees, about making sure that the independent committee, special committee, is getting its own advice, about making sure that there's like no conflicts. It's been a little sliding backwards on some of those things, unfortunately. So in terms of like, one of the provisions was you need to have a majority minority, right, which is super important, and I think is super important. And some creative lawyer, unfortunately, has created this, has said, oh, for us to we're not going to have a majority minority because we want to make sure that the minority is still contender. We're like, 1 second. So you want tyranny of the minority?
Right.
Right. Right. So that was like a creative but bad idea. And I think the only way this is going to really become established law, I think that's bad. And I'm going to continue criticizing that if and when they happen and when they have it. But for this to become really established practice, it's going to be super helpful for some of the litigation that's going on around fair M&A to establish what the law will be according to fair M&A. The fair M&A committee really need to have the power of law. You need to have legal precedent, and that's super important. But otherwise, look, if you look at the structure of how this M&A is going on and the premiums paid, the empirical evidence, there's a sea change, since 2019.
Yeah, it's all very encouraging. I think we have time for one last question. It's a good one. It's another anonymous person, but he's asking about Kishida, the prime minister's emphasis on raising wages, and does the whole stakeholder capitalism thing that Kishida is endorsing, does it create opportunities for pushback in response to the demands that a company should return more cash to its shareholders? Or, I think we could stretch that and say, or do other, things that would benefit the company's long-term sustainability.
Yeah, I think the answer is actually overwhelmingly, a resounding no. The phenomenon is the companies make more money. It's good for everybody, right? The answer has not been pay shareholders instead of the employees. None of these companies, you can look at every single one of these companies. They just haven't raised wages in 20 years.
Right.
Then you're not talking about companies that are deciding who to pay. The answer is paying nobody.
Right.
Yeah.
It's interesting to me. Maybe this will make you laugh. So there are a couple of public funds in the United States that are floating these sort of DEI kind of ideas with Japanese management that you have to pay your wages more because it's the fair and the right thing to do. And I recently had a conversation with a Bank of Japan guy who said, "Oh my God, the yen! Oh, deflation! Oh, Minister of Finance can't intervene. That would not be the right thing, and we're going to get stuck." He said, "Thank God for activists." A Bank of Japan guy saying, "Thank God for activists because these kinds of demands to raise wages are going to happen, and maybe they'll make it happen in a way that the government cannot."
I'm happy if everybody get paid more. Seriously. And when we're suggesting performance-based compensation, we explicitly are suggesting it's not just for the board, for the senior executive. We want to go all the way down to mid-level executives.
We have 1 minute, and I have a really good question for you. I bet you'll enjoy answering this. Somebody recently asked me, and it never even occurred to me. The person asked me, "Are there any female activists?" And the only name I could come up with was Murakami's daughter. But even in the United States or Europe, I can't think of a single one. It's interesting.
I can only think of, there are two women that have reached out to us directly as their directors of companies, and have reached out to us, and we've been very actively engaged with them about improving their companies. And so they're not activists in the narrow sense, but I think they're activists in the broad sense.
No, of course. And there's plenty like that. But I mean, there are no women who are running activist investment funds.
I think there's a woman in Europe, but that's fair point. I think
it's just interesting.
Look, it's interesting. Remember, right? The activist funds or engaged funds are a small subset of the total investment pools.
Absolutely.
And so, we're spending, as you know, we spend a lot of time on continuing education, and the more funds that are run by women, then you will eventually have engagement funds. But I think if you look at the overall percentages, are still pretty shockingly low.
Yeah. No, I wasn't blaming you at all. Gosh, there's like 25 other company questions, and it's 8 o'clock. Do you have any last words you want to say to the audience on how you feel about Japan, the way things are going in Japan?
No, look, I think there's massive acceleration and there's big improvement, and it's taken a long time to get here. And I think there was a lot of excitement back in 2013 and 2014, and then there was a lot of disappointment like immediately. And this is not something you can like snap your fingers and it just like happens, right? They continue to turn the screws every 6 months, right, to every 18 months, and that is yielding real results. And we're continuing to see more acceleration and engagement in management wanting to improve in all those signs, whether it's improved profitability, improved ROE, more buybacks, all the signs you're looking for. And so look, we're having a ton of fun, but I think it's a ton of fun is like good for everybody. And so yeah, I mean, the bottom line is though, this is Japan, it's not the States, and so you gotta apply it in a sensitive way to.
When you talk about big change, the United States is no better. I used to compare like this stuff that's going on in Japan to like in the United States, healthcare is our biggest issue, right? It's horrible. And we finally elect a president named Obama who is going to do something about it, and he passed a law, and guess what? We're still working on it.
Isn't the CEO of Engine Number One a woman?
No.
Okay.
I see sometimes that Kathy Wood of ARC is sometimes called an activist, but maybe that just means she has to defend her own share price, her own performance. Well, Seth, you've been great. It's been a lot of fun for me, and I hope it's been fun for the audience. And I really appreciate your time while you're like bouncing around the world. So it only remains for me to thank all the sponsors of CJEB, without whom we couldn't do all these programs. So yeah, here's the list coming up on the screen. They're all very generous supporters, and again, we do a lot of things, not just my program, and without their support it wouldn't be possible. I also just want to mention that this is the last of this in the series of my program until I've got one event in June which may be of interest to the audience. It's a panel of directors talking about what makes a great board in Japan, and Columbia Law Professor Jeff Gordon, who's written a lot on, it's called Board 3.0, on what makes the new, an effective board in the new world. So we're going to have a discussion about that and how it relates to Japan, and I hope you'll tune in on June 8th. So thank you very much again for tuning in. Thanks to Seth for being with us. Thanks for all the great questions, and we hope we'll be seeing you again soon.